Hello from Trend Signal for a review of the data and the events week beginning the 14th of May. Week signals the tail end of the first quarter earnings season in the US. Despite some negative reaction in the first half of the earnings season, stocks have climbed pretty impressively over the past 7 to 10 days. For the record, 78% of S&P 500 companies have reported a positive earnings per share surprise, which is the highest since third quarter 2008, or would be when we know all the results out. We still have a few coming out this week. For the first quarter 2018 earnings growth rate for the S&P 500 is 24.9%, which is astonishing, really. And that would mark the highest earnings growth rate since third quarter 2010, which was actually 34%. But, of course, we know what was happening then as the market emerged from the Great Recession. That was the first sort of quarter when things really started to improve. So impressive numbers that aren't necessarily reflected in overall equity performance, though, certainly not over the last 4 weeks. And the reason being, almost undoubtedly, is the interest rate outlook, which still worries some investors. Last week, equities actually did perform pretty well. The FTSE up 157 points, which was just over 2%, really performing well. Ironically, since the MPC decided not to raise rates, and it was really signalled to the markets by Mark Carney, which really pulled the rug from under sterling. If we look at how sterling has behaved, you can see certainly since mid-April it has fallen precipitously, really, which in turn, of course, has helped UK equities, hence the reason why the FTSE is particularly strong. In fact, the FTSE is now up about 12.5% or 860 points since late March. The FTSE 250 not benefiting anything like as much, but that also up. Right. Let's go to the calendar and have a look at what's coming out this week. It's a little bit of a quiet week, really. Nothing out on Monday of any great note. Tuesday really is the first bit of data, and ironically, it isn't listed here from Forex Factory, but we have the German first quarter GDP, the prelim reading. It's certainly not listed as a high impact by Forex Factory, that is. But it will be very interesting to see how well, or more likely, how poorly Germany performed in Q1, despite what everyone was thinking in Q1. Where the Eurozone was supposedly doing quite well. Germany is obviously important. It's the largest economy within the Eurozone, so anything that happens there will have a great impact on the overall performance of the Eurozone. And we're expecting a reading of plus 0.4%, which is a fall from plus 0.6% in the previous quarter. Still quite a bit better than the UK, of course, although I think the plus 0.1% that we reported will probably be upgraded at some stage. Other data out on Tuesday, we have UK jobs report, where well, the key thing I think we're going to be focusing on is the average hourly earnings. It could have a direct bearing on the timing of the next rate rise from the MPC, or more likely stop the MPC from raising rates, and of course that will have a direct effect on sterling. Retail sales, or more importantly, core retail sales from the US. Key reading, really, on the appetite of US consumers to keep on spending, which could really determine how the second quarter turns out. In fact, we have key data for retailers in the US coming out this week. So whilst the Q1 earnings season sort of peters out, the remaining companies, I think there's about 10 coming out from the S&P 500 this week. A lot of them are the main retailers, with results from Walmart, Nordstrom, Home Depot or Depot, JCPenney and Deere & Co. So quite a few of those out by the end of the week, which will give us a better idea of exactly how well the retailers are faring and competing with the mighty Amazon. On to Wednesday, we have Mario Draghi from the ECB speaking in Frankfurt. I'm not sure about what, but when he does talk, sometimes there are references to the Eurozone and what might be happening there. So The euro will be particularly sensitive, as indeed stocks in Europe will be as well. Other than that, we have the regular weekly crude data from the EIA. Probably another drawdown will be expected as prices have slipped a little bit from 3.5-year highs last week. It was the Trump ripping up the Iran deal, re-sanctions, and the nuclear testing or enriching of uranium, etc. But that's all gone now. Crude prices jumped, I should say. Brent jumping more than WTI, because that's the market that's going to be affected more by what was deemed to be a slightly more hawkish Trump than what was expected. Anyway, we will see how that comes out, but it looks like shale oil will be unable to keep pace with the increase in global demand in oil. We'll be watching oil quite closely. Trump has already warned or advised Saudi Arabia about letting crude prices get out of hand. I call it a warning. He's called it advice, but certainly Saudi Arabia's got a lot of slack in its system. So if need be, it might be pressured into increasing production if prices do start to accelerate any further. Manufacturing production in the States on Thursday, not listed here again, I'm not sure why. Fully Fed Manufacturing Index, it's a measure of manufacturing activity in one of the most important federal districts for manufacturing. It's remained quite steady over the past 6 weeks, although if the forecast is correct, this could mark the lowest reading since August last year. So not necessarily all plain sailing, but these forecasts always tend to unclub reality for some reason. I'm not sure why. Friday, we finished the week with inflation reading from Canada. No forecast in here at this stage, but there will be one by midweek, I'm sure. Obviously, retail sales and CPI will have a direct bearing on any of the CAD crosses. That's it. Thank you very much for listening. All the best. Bye for now.
If you would like more information about trading the right way, Trend Signal is giving you the opportunity to see and hear about its services live at a free online seminar. Take a look at the Trend Signal website for the latest events and to book your free place.